All right, the world is facing severe economic headwinds, but will India be a relative bright spot? Several reports claim investors and companies are looking at India for a once-in-a-generation opportunity. Just today, though, Moody's downgraded India's GDP growth forecast from 7.7% to 7% for the year 2022. For the year 2023, they are projecting a growth of 4.8% for India. Even so, India still remains better off than other G20 nations who've seen a sharper cut. The world's economy is also expected to slow down and grow at a minimal rate in 2022. Let me go across to Madhavi Bokli, Senior VP at Moody's, for more on this story and for more on that report, more details on that report. Madhavi, great to have you on the show. Let me begin with the global growth outlook. You're saying global growth will slow in 2023, remain sluggish in 2024. Your estimates have dropped to 1.3% for G20 nations in 2023. The reasons may seem obvious, but let me get you to elaborate some of them.
Yes, so we are in an, thank you, Tamanna, for having me first, but we are in an environment where inflation rates are quite high and painful across major economies. This is compelling for months now. We've seen central banks across different countries, including the US Fed, ECB, and even the RBI, raising rates, draining liquidity from the financial system, and this kind of policy tightening is bound to reduce demand. It's designed to reduce demand, right? So that's one of the reasons why the driver of lower growth forecasts across the board. In addition, we are in a period where Europe is in the midst of an energy crisis. So we're expecting recession in Europe. We are expecting a mild recession in the US. We've got growth forecasts for the second largest economy, China, amid their enduring COVID-19 restrictions, as well as slow percolation of the property sector stress there to the wider economy. And in general, global financial conditions are quite tight. We expect weaker trade growth, and that also creates a tough external environment for emerging market countries, including India. And so overall, like you said, we've got our growth forecast down from, we expect now growth to decelerate from 2.5% this year to 1.3% next year. A tepid recovery to 2.2% in 2024, but that would be a really shallow recovery.
Before I come to specifics on India, let me, talk to you about one point where you talk about the recovery in 2024 being dependent on the actions of central banks and governments. Now, the actions that we've seen so far, especially from central banks, are one way, where interest rates harden to quell demand, etc. Is it really working, and is more of the same going to be enough?
So yes, I mean, in the US, for instance, we have clear evidence that the economy is slowing, and the rate hikes, for instance, are slowing the housing market and other parts of the economy. So actions are certainly working. The big question is, what level of policy is tightening is just right, and that's a very, very difficult sort of calibration in the best of times. The most normal tightening cycles are hard to navigate, and here we are faced with multiple risks, multiple challenges, and so navigating that sort of policy tightening, getting policy positioning just right, like I said, is a difficult task ahead, and that's where we think that how governments manage is going to really it's going to be really important for how 2024 plays out. We could see over-tightening in some countries. We could see under-tightening in some countries. In Europe, for instance, they're facing a very big supply-side shock. The governments are trying to take targeted policies to reduce the stress on households and and firms, but at the same time, the challenges are quite large as well. So getting policy right is going to be difficult. If they do, if they are nimble, if they read the tea leaves properly, get policy calibration, and by next year this time, if we find that inflation rates are falling, if we find Europe is coping well with the energy crisis that they have been subjected to, then we could move into a more stable environment in 2024. But the next 6 to 9 months, in our view, are going to be extremely challenging and very, very uncertain. Uncertain also for firms, right, to make decisions, longer-term decisions, households to make longer-term decisions in this environment as well. So there's a great deal of uncertainty, essentially, that's been thrown up by all the multiple headwinds. And so that's what we are watching very, very closely.
Right.
But it's going to be a tough environment to
So
navigate.
a tough year ahead. The best case scenario seems to be that next year this time, things would start to improve. But we know the next 6 to 9 months is going to be tough. Madhavi, let me come to the India piece. Yes, a cut from 7.7 to 7% in your forecast for 2022. What struck out for me a bit more is the 2023 forecast at 4.8%. So quite a deceleration there. Relatively though, seeming to do better than other nations in the G20 pack.
Yes, absolutely, and it's a very interesting story actually, because on the one hand, there are positive tailwinds from just the fact that the Indian economy is recovering quite nicely from the COVID shock, right? So we've seen pick up in services sector and so forth, but at the same time, you have the same sort of headwinds as everywhere else. Inflation is higher than the RBI would like. The high cost of energy, food, fertilizer. That's on the other hand dampening, likely to dampen sort of demand. We expect the monetary financial global monetary financial environment to be fairly tight, and that has repercussions for India as well. So Indian monetary policy, we do expect it to remain tight for some time too, just like everywhere else. And then most importantly, we are again thinking of India in the global context. Like I said before, we are expecting a recession in major parts of the world, especially G7 countries, where India exports a lot to. And so from the export side as well, India faces quite serious headwinds in 2023. And so that's really the rationale behind our cut to India's growth forecast to 2020 for 2023. But then we do expect the growth story to improve in 2024. We do think that there are fundamental strengths in the economy. We are expecting the private sector capex cycle to get to strengthen for some of the policies that the government's put in place to attract FDI investment to bear some fruit, but that will take some time, and that's why we are expecting that pick up really only in 2024. It's really the external environment also that's quite challenging.
So domestic demand is our best bet as far as India is concerned. That it remains.
Yeah, certainly, of all the G20 emerging market countries, India, Brazil, these countries are more domestically driven, and so that's certainly a positive for the growth story.
All right. Thank you so much. Madhavi Bokli, Senior VP Moody, is joining us and breaking down that very, very interesting and important report. In a nutshell, next year is going to look tough. 2024 will hopefully see an improvement. India will relatively be in a better place. Thank you so much for speaking with us.
Yes.